All right, this section is on your finance plan of your artist business plan. And we've been through pretty much all of your artist business plan in prior classes. And that would include your company overview, your personnel plan, your products and services plan, your marketing plan, your customer plan, your promotion plan, your advertising plan, your competition plan, your sales plan, your intellectual property plan, your technology plan, and finally, we're up to the financial plan. Yes, lots of little plans within the artist's business plan. So we've also talked about your resources, and that's not really noted on here, but we'll be able to get to the appendix, and then we'll talk about your executive summary, most likely next week when that comes down. So let's get into the details of what the finance plan is going to entail, and hopefully we'll be able to move through this so that we can complete a lot of it today, and then I can get into some specifics about credit and working with investors and things like that on Wednesday. So within your finance plan, there are a couple little subtopics, and they include the startup summary, which most likely is going to be written close to last, but we'll talk about the startup summary, your use of funds, your important assumptions, your key financial indicators, your break-even analysis, your forecasted projected profit and loss, your forecasted balance sheet, goodwill, accounting, an independent accountant's report, your forecasted finances, your forecasted cash flows, your forecasted operating expenses, and your forecasted revenue. In addition, part of your finance plan also includes risk reduction, risk management, your exit strategy, your spending strategy, the return on investment, budgets, ratios, and your accounts receivable and accounts payable. So all of those are little mini things that go into the finance plan. And as investors come on board to help the artists with, the career or maybe collaborators, this is certainly a section of the plan that they're going to want to pay attention to see if it's going to be worth their time and effort. So when we talk about your artist startup summary, a lot of this is done later, but it is the first thing that's a part of your plan, is this summary. Now there's an overview, and that's really last, but the startup summary, a lot of times in order to get into what you're going to need for your startup is what are you going to use the expenses for? So that's the use of funds. What are your projected operating expenses, and that's going to go into here in order to help the artist solidify their finances. In order to do that, you're also going to need to know what kind of money you're going to need up front to make this work. So I can give you a little tips along the lines. I've been through this a lot of times with multiple companies that I've worked with, but I do need you to make sure that you understand this. When I do my financing for any new company, I do a few things right off the bat, and I keep this mindset a lot. When I think of all my expenses, I go down every little thing I can think of that's going to be an expense, okay? So there's a startup expense, and then there's a running expense. Rent, for example, is a running expense. It happens every month. It's not that you pay for the whole rent for the entire year up front as a startup. So two different types of things. But one of the things that you do have to keep in mind when you're thinking about expenses, when you come up with your expenses, my suggestion is to double them. Take all of your expenses in minute detail. If you need a couple pencils or pens, write it down. If you need some paper for photocopying, write it down. What do you need to get your business up and running? And then we can talk about your operating expenses as we go through this, but things that you're going to need just to get off the ground. Take all of those expenses, add them all up, and then double them. Now, the reason I do this is to be conservative on your numbers, because if you don't double them and then you go over whatever you projected, your investors are not going to be happy. However, if you say, these are my expenses, and you've already doubled them, and you come up underneath that amount, then perhaps the collaborators that you're working with will go, way to go, good job, you saved on this, this, and this, and it's more of a positive thing. So take all of your expenses and double them. Now, what about your income? It's the same kind of idea. You take all your potential income of what you're going to be doing them and cut it in half. All right. So if you go over it, boy, everybody's happy. You made more money than you thought. If you go under that, you didn't do your projections properly in the first place. So you really have to start thinking about it. Expenses you double, income you cut in half. Now, if you still show there's a profit because of this, now you're in the money. Now you're going to start to see, okay, I'm doing this conservatively in order to make sure I don't go over my expense budget, and I'm not projecting income that I don't have. So you want to be able to do your business and start your business showing that you're going to be able to make some money at this within a certain amount of time frame. And that usually is not the first year, just so you know. It may be 2 years, 3 years, 5 years down the line. But as you develop your finance plan, you'll be able to project when the artist is going to start making money. And that's going to be reflected into your break-even analysis. Okay? So, things to think about when you're doing this. You know, what kind of startup expenses are you going to need? What kind of startup assets to fund this company? How much money are you putting in? It's always a question I get when I talk to investors. They always say, oh, well, this looks great. How much money are you putting in? So one of the answers that I've come up with that seems to work pretty well is I'm not putting in anything. I'm putting in my hard work. I'm putting in my expertise. I'm putting in my background. I'm putting in all my connections that I have. I'm putting in my assets, but I'm not putting in any money. That's why I'm talking to you. So they understand that, okay? Now, a lot of times I have to put up money, and I have to tell you that I've started businesses on a credit card. I don't recommend that, but I've done it. Sometimes you're paying a huge amount of interest on those credit cards, but I did it in order to survive on some of the companies that I've formed. My booking agency, for example, I had a $5,000 investment from a collaborator, but about $20,000 had to go onto my credit card. Lucky for me, I have good credit, and I was able to get that started with that kind of credit card. And I'll explain to you credit after we finish up the finance plan, the overview. Okay, so what are some of the assets? So non-cash assets from startup. Maybe these are things that you already own, equipment or recording or software or a PC or a phone, okay? Add them up. Are those now owned by the company, or are you loaning them to the company? Okay, things to think about, okay? So either the company owns these assets or they don't. I would recommend that if you can get the company to own them, that means you can write them off your taxes. So these are things that you might want to consider. Please keep in mind that I am not a financial investment counselor or advisor. I cannot give you financial advice. And I don't want you to assume that the information I'm giving you is any type of advice along those lines. You have to be certified for that, and I am not. Okay, some other assets. Cash. How much cash is going into the company? And then add them all up. You'll get your total assets. And then you're going to look at your liabilities, okay? What are you going to need to borrow, if anything, to make this company go? And are there any long-term loans that are coming out that you're going to need to put in here? Long-term liabilities. Do you owe any bills? Do you have any outstanding payables? Maybe your phone bill is due, or maybe the rent's due, or those kind of things. Any other liabilities? And then add them up, come up with your total liabilities. And then your equity, which is your capital. Okay, so these are things that may be invested into the company that you have invested, or your partners or collaborators have invested. And then you'll add that up to come up with your total equity or your total capital. Okay, so keep in mind that your liabilities plus your equity should equal your assets. If you look on here, you'll see that total assets is 187,092, and then when you add up your total liabilities and your total capital, it's 187,092. Same thing. Okay, so your liabilities and your equity, or your liabilities and your capital, should equal your assets every time. If they don't, your books are wrong. Okay? All right, so when you start thinking about your startup summary, it's like, okay, well, my expenses are low at the beginning, okay, because you really haven't started yet, right? So you don't have many expenses. Most of the stuff you're going to be putting into this is going to be assets, things that maybe you own and control. Maybe there's no investments, but maybe you've got a lot of loans that you're going to be taking out in order to get this thing to happen. So it's either your own money or somebody else's money as a startup. And you're going to have to judge this by how much money you're going to need, and we'll talk about that in just a second. Okay, use of funds. So in this section, you're going to explain your current status of your project, and for your project, this is your plan, and how you use the funds. Now, I want you to keep in mind, because I do have project on here. Every project that you work on, let me repeat that, every project that you work on should have a finance plan. Every project. So you'll know how much money is projected to be made or lost on every project that you work on. If you're working on something for fun, it's a hobby. Okay? And so you don't need to have this. But if you're working on it for a business, you want to make sure that every project that you work on is going to be successful. Otherwise, why are you doing it? Okay? So if it's going to be successful, you have to have a finance plan for every project. And that means you're going to have a use of funds for every project. If this project's going to cost me $10,000, I need to know when it's going to be needed, how it's going to be spent, what's going on with my balance sheet, et cetera, okay? So for your use of funds, typically an investor who comes in and says, hey, I believe in you, I want to help you, I'm going to give you some money. What are you going to use the funds for? You got to know the answer to that question, because it will be asked. What are you going to use it for? And I can tell you another little hint here, and this has happened to many of my clients. They go and start an office, they get a brand new desk and a brand new chair, and they've got brand new file cabinets, and everything they walk in looks like it's great. Be very careful of that. When investors come in and they look that you have all new stuff, they're going to think, this is how you're going to use my money? How come you don't have a desk from 1940? How come you don't have some old file cabinets in here that you bought over at Salvation Army? So investors will look at how you come across. And if you're looking like you're going to be wasting the money on new stuff, they may not invest with you. So please keep that in mind, okay? So if they give you $100,000 to get going and the next day you drive up in a new Cadillac, they're going to think that was not a good investment, okay? So you got to be able to please your investors. And if you look at guys like Warren Buffett, I mean, he drives a Ford Taurus. He's one of the wealthiest guys in the world. And he lives in a moderate home. No big extravaganza thing. He knows how to save his money, be frugal, and a lot of investors look at this. And even when people come to me about investing in their companies, I look at them and I said, "Where's your plan?" "Oh, I'm working on it." Well, then don't come to me until your plan's done. And then I've had this one guy comes to me regularly, and every time he doesn't have a plan. And every time I say, "Well, come back to me when your plan's done." Then he'll come back to me in about 6 months and say, "Hey, I've got a new idea." I'm like, "What happened to the old idea?" "Oh, well, I didn't do it." Well, my credibility for him just went down. And now he's asking for money. He still doesn't have a plan for his new idea. I don't have time for that. And neither do big investors. So when you're looking for investment dollars, you really have to play the game of what they're looking at. How you use your funds is going to be an important question for you to answer. Okay, important assumptions. Just remember that there's perception and then there's reality. If they don't go hand in hand, the artist is in a la-la land. All right, so they are in a world that is not real. So you have to really make sure that your perception of where you're going and your reality is fun. I mean, reality is real. And for me, that's fun. So if you don't have them together, it's disaster. So your important assumptions have got to be there to make this work. One important assumption, for example, is let's just think about a year ago. Was anybody assuming that maybe something was going to go wrong with the economy? Not many. I did. I pulled out of all my cash and I put it all into other assets, and I was very protective. I didn't know what was going to happen. I just knew something was going to happen. And the only reason I knew something was going to happen is because I was watching what was happening to Trump, our president, and I was looking at all these false allegations, and I'm like, wait a minute, election year? They're going to come up with something in order to make us not want to pay attention to him at all. I don't know what it is, but something's going to happen. And wouldn't you know, COVID happened to happen, right? Lots of other things have started to happen. Interest rates, the economy tanked for a while. So things you got to pay attention to that maybe you don't want to have happen. And guess what happened to the musicians? Gee, I don't have a gig. Yeah, well, these are important assumptions. You've got to be able to pay attention to know what's going on to make your assumptions within your business. Okay, key financial indicators. And just because we've got, good numbers right now, that does not necessarily mean that they're going to be good numbers next month or next year or next 5 years. Doesn't mean it has to be yours, but I look at these key financial indicators and I'm going, wow, we're 30 points from the record high? When did that record high happen? Oh, in February, same year. Oh, wow, that means it's been rocky and it's gone up and down this year. I don't know, we had a record high and then we had a drop of 8,000 points on the stock market, if that's your indicator. Some people use the stock market as an indicator. I don't, but many people do. And so something to consider for your finance plan. We're going to leave off right here at break-even analysis, and we'll begin talking about this in our next session. Are there questions?